In this video, guys, we're going to talk about 5 trading psychology flaws. Stay tuned. Hey traders, a very warm welcome to you. Okay, massive topic this. As we know, trading psychology, trading discipline, same kind of umbrella. It's just the thing that we need to get a good grasp of to become the traders we really want to be. So here are 5 trading psychology flaws, taking inspiration from these from other blogs and other areas on the internet. I thought I'd compile them all together and give you a video, and also comments below. As always, let me know what your thoughts are on this subject. Number 1, burnout. So this is something that I know what you're saying. You're thinking, I don't get burnout. I can work flat out. And you know what? You can for a while. It's definitely true. You can work. You know, the times when you sit in front of the screen, you're there at 6 o'clock in the morning, you're right the way through to the US close, and you're doing some studying and doing some this. It's 11 o'clock at night, you're going back to sleep. You can do that solidly for a long period of time, but you can't do it forever. You know, I know that you can focus hard when the time is right. If you're a day trader specifically and you want to be there when the volatility is there, that's good. But when the opportunity comes, the volatility dies down, or there's a quiet period, then take the opportunity to refresh yourself. You may think you can stay there in front of the screen, carve out a bit of extra cash, but honestly, you'll make more in the long run if you do flat out stints, break, flat out stints, break, and then know that that might do you for a year while the conditions are there. And I'm very much an advocate of, you know, make hay while the sun shines kind of thing. So if they are there, put the effort in, but you've got to be careful you're not overdoing the thing. You're not sitting there, you're sitting in front of the screen, you're staring at the screen when there's no opportunity, you're not putting in times for a break. Your whole life revolves around trading. And as tempting as that is, been there myself, I've done it, I've put myself in that position. It doesn't actually ever, or very rarely, does it mean a better bottom line at the end of the year. You know, you'll find that if you do schedule time to rest and to just not let your mind think about trading, to do stuff during the day, an hour spell of doing something different, to take a couple of days off, to take a longer weekend here and there, to do a half day of trading, you know, all these kind of things that you think, oh, I don't want to miss out on money, the market's moving, they will positively impact your bottom line as opposed to sitting there all the time. And I know that from experience, and I know that from other guys as well. So being careful you don't burn out by overdoing the kind of, you know, mental stimulation that trading does, and that overload of cognitive load that you can get. So number 2 is perfectionism. Again, I mean, I'm guilty of kind of all of these, guys, and I'm sure you are. Let me know in the comments below the ones that you're guilty of and any more you can think of. But perfectionism. You know, we're trying to do everything perfectly right all the time. And this leads to just the wrong mindset. You think, I've got to stick to this, I've got to do this, I've got to do that. You've got to allow yourself a bit of flexibility. You've got to give yourself a little bit of leeway. And always package it as, hey, look at yourself as if you were an employee of your trading firm. So you're running a trading firm, you've got employees. What would you expect from them? You would never expect somebody to be operating perfectly 100% of the time. It's just not feasible. It's not going to happen. People make mistakes. People have bad days. People have good days. You know, you hope that the average is where you want it to be. So your level that you expect is here, and they're operating at that, but they're going to dip below, they're going to dip above, just like you are. So not expecting perfectionism, expecting to make mistakes, expecting to slip up in trading, expecting to misread something, expecting to break an occasional small rule, but not make it into a big deal about it. You know, that kind of thing allows you then the freedom to become a better trader. Honestly, it does. When you become so strict, we go through cycles, and I'm digressing slightly here. We go through cycles as traders. We go from doing everything and having no rules to then putting loads of rules on us and being really restricted and being frustrated when we step out of that box, to then the final stage, I believe, is when we have a little bit of flexibility. We have the boundaries there, but we're still able to move a little bit within our personalities and our trading style within that. So, you know, not being so caught up on perfectionism. All right, number 3 is inconsistency. This is a difficult one to kind of quantify, but what I really mean by this is, you know, you're trading in such random ways that one trend day you'll be kind of looking to buy a pullback. The next trend day, you'll be looking to find the top of it. You know, your P&L will be swinging wildly. One day you'll be disciplined, one day you'll be really badly disciplined and trading stuff you shouldn't be. You know, all that kind of stuff. And that is what you've got to watch out for. I think that's a big one. This is probably one of the biggest ones of the lot. Because that can lead to all the others as well. It can lead to this frustration we'll talk about in a second. And actually you never really get to improve because you're all over the place. So, you know, we've talked about this before in other videos where you isolate one of your problems and just stick to it. So get rid of all the noise and just be consistent with one thing, one improvement, one strategy, one thing, and then add more on. Because this just really messes with your head when you're one way or the other, because you think you're really doing really well, making good progress, and then all of a sudden you'll take a massive step backwards, and that's really challenging for the mind. All right, number 4, frustration. Wow, this is a big one. This used to get me massively, being frustrated with the lack of performance in the early days, you know, the progress, not trading the size I wanted, and then later on increasing my size from a smaller stake to a meaningful stake, and then finding out I was trading different, having to back that off and going through that learning cycle. And this is a big, and it can be going down to a granular level as well, guys, where you're just frustrated with the market, you're frustrated with this. And there's nothing to do with this apart from just learn to kind of accept it, and over time you'll become less frustrated. You won't be frustrated that the market's not offering opportunities because it happens all the time. You won't be frustrated that you closed out too early because it happens all the time. You won't be frustrated that you got stopped out on the high tick or the low tick of the day, because hopefully it doesn't happen all the time, but it is going to happen. As a day trader, it's going to happen from time to time. You're going to be the guy who sells the low or buys the high. And same as a swing trader. You know, you're going to come out just when it turns and rips off 20-30% in your direction. It's the way it is, and you will get frustrated by it, but you can't let it influence your next trading decision. Is the best way of doing it. So accepting it's going to happen, accepting whatever it is makes you frustrated is there, but then just letting it kind of go and carrying on with the job in hand, which is, you know, making the next good trade. Number 5, final one, distraction. It's so easy to be distracted in trading, and you know, because it's relatively easy to actually trade, i.e. all you got to do is click a mouse, log into your platform, open up a ticket, click a mouse. It's the easiest thing in the world. It actually means that you can get distracted and then still trade. But then, as we know, doing that, clicking the mouse and making a trade is far, far, far from having the consistency and making money over time. So easy to be distracted, especially if you're trading from a home environment, other things going on. Maybe even if it's gone quiet during the day and you're browsing, you know, news online, or you're on your favorite social media, whatever it may be, and then something happens, you know, you're letting that distraction. So you've got to kind of put these rules in to say, hey, listen, you know what, when I'm at the trading screen, in fact, you know, on my big trading screen, there's nothing on there at all that I can get access to the internet. In terms of, I can get access to my news and stuff like that, but I'll never use it to go on any news sites. I never use it to go on Facebook. Not I'm on Facebook, but that, you know, that kind of thing. So just being aware where your distractions come from and trying to kind of keep them out of the way. All right, guys, those are the 5 there: burnout, perfectionism, inconsistency, frustration, distraction. Rolled them into one kind of big video for you. Any others, stick them in the comment section below. If you like the video, give it a thumbs up. Don't forget to subscribe if you're new here and you haven't yet and you want to see more videos from me and other traders on this channel. Good trading, manage the risk. I shall see you in the next video. Take care, guys. Bye-bye.